Yeah, right here. This is what I took this morning. Almost 300 bucks. You know, if I didn't have that hedge in place, I wouldn't have made that money. And I you know, still be hoping that my 5 long positions recover. You know, we got to stop all the hope crap, right? Instead of hoping, how about just, you know, if you're still confident in your long positions, just leave them in place and spend a little bit of money. I call it buying insurance, okay? And the thing about this, about hedging, I was okay with this going to zero, because look at it this way. If I didn't need to use my hedge, so I deploy my hedge, it's in place, the trade's open. I was okay with it going to zero, because look at it this way. If it went to zero, then that means the market stopped selling off and probably reversed. And then all the drawdown I was seeing on my long positions eventually starts disappearing. And then that's fine, because the amount of money that you're spending on your hedge should only be a fraction of the amount of money that you stand to make on your longs. So just to kind of pull numbers out of the air to make it easier to understand, let's say I plan on making $500 on this long position, but maybe I was a little concerned that there could be some short-term downside risk there. So if I stand to make $500 on my long, why not take $100 of that potential 500 profit and use that to buy some insurance to protect yourself if there is a down move? That's, I think, is a good way to hedge. Now, if you're expected to make $500 on your long position, you don't want to spend $500 on your hedge, because that kind of can be a wash in a way, right? The way I hedge is, if I'm looking at, again, $500 in potential profit, I'll sacrifice maybe $100 of that and open up an opposite trade for a bearish trade. And the good thing about using a SPY put debit spread, the one that I did, is the risk reward is great. I mean, the risk reward on this hedge that I just closed out today was 270% potential return on risk. So that means it's okay to just spend a little bit of money on the hedge, because my return could be, you know, 2-3x what I spent for that. Also, my point is, if this trade would have went to zero, I was okay with it going to zero, because that means the market stopped selling off, it reversed, went in my favor, and all the drawdown that you saw on your long positions should be evaporating, and so that's fine. It's basically just spending a little bit of money so I can sleep at night and have a little bit of downside protection, where when the markets are selling off and everyone else is crying the blues, I'm over here making money on the downside, all right? So I just wanted to go over that with everyone today for obvious reasons. You know, just pull up the daily chart on SPY, and this is, you know, and everyone that knows me in the Discord, I always talk about hedging. I think it's important to do. It keeps us safe.